Good morning everybody, and this is your S&P 500 setups for today. So a bit of a rough week for the bulls last week, and just want to put the levels in quickly, then we can talk through what's going on. So first things first, this area here at 51.41 was a fairly strong area of support. It did look like we were bouncing off that. We had diversions in play. Everything was just pointing towards that was the end of the chaos, but then we fell further. So Friday's move to the downside was based on the first set of results that were coming out, which were the banks, and then over the weekend we've now had a war that could be kicking off with Iran attacking Israel. So right now you can see we've gapped up. We'll look at that on the lower time frames. We did bounce off 51.11, which is the next logical support area. Beyond this, we are talking, and I'm just going to do this. So this little bar that you see here is sort of higher than the next two fractals. So in other words, price has gone past it. So I am going to leave that in, because on the lower time frames you're going to see that that is a fairly strong area of support. So that is a zone that we should be looking at for support. That's the next logical area at the moment. So it's 50, 59, 50, 50 and 50, 44. So in other words, if we drop below 51.11, so 5111, and sort of reject that area, there's nothing, well, there is one more little level which could cause an ambush, which is right here at 58.4. Those are the major levels that you've got to the downside. Still lots of support available. Oscillators are now actually nowhere, but they have eased off a bit. If you just look at this on the daily, you can see oscillator still pointing down quite strongly, but this is starting to look like a channel. And remember, the overall trend is very strong to the upside. Here's your trend reversal, which is all the way down at 48.20, which is the next level of major support. Anyway, that's kind of the setup that we've got. If we could just drop down through the time frames, and starting off with the 3 hour, you can see we've had a fairly strong gap up. That's at 146 points of a gap up. Not too much to worry about. I think we slap bang in an area of resistance, and you can pick it up on any of these tails that you see here. See, there's a bit of a pin bar here as well. So I'm just going to take the pin bar, and your zone is between 51.41 and 51.51. So in other words, 51.50 is the area that you do need to pay attention to. Now, just bear in mind what happened last week. Big up, big down, big up, big down, big up, big down. And the minute you start getting into the 1 hour, you start seeing, above the moving averages, below the moving averages, above the moving averages, below the moving averages. Every time it gets below the moving averages, it's a massive move to the downside, as you see most of last week. So I would take everything that you see with a big pinch of salt at the moment. You want strong confirmation. So typically what happens is you see the most logical area, which is 51.50, then everybody jumps in there, price moves past that and comes and picks up these pin bar tails. I suppose they're not all pin bars, but they're just long tails to the upside, and price comes and picks up that area for a rejection. So for me, looking at the 15 minutes, remember you've got earnings this week, you've got the rest of the banks, the rest of the financial market kicking off. But if you look at the 15 minutes, you've had a solid gap up, and a lot of people are going to be thinking, oh, this is done now, we're moving to the upside. But I'm more the case of watch 51.50. There should be a rejection there. This gap will not stay open today. I doubt that very, very much. I'd expect this gap to close, and then we can see what happens from there. But for now, the trend is down. And I would argue that you're looking for areas to short off. So it would be 51.50 and 51.66 are the two logical areas. See, there's a little bit of a gap here. It's an intraday gap that happened on Friday. So just above it is 51.73. Those are the areas that I'd be paying attention to for a rejection and a move to the downside. If you're watching this on the hour, you can see all the way back up to 51.80 is a fairly decent opportunity for a short. Well, that's my view at the moment. What I would expect is a rejection up in this area, or possibly where we are now. This depends what happens, but wait for the market open. It'll reveal itself fairly quickly. But what I suspect is that you're going to have a rejection and then a move down to either close the gap and form a higher low, which would then set up another move to the top of the channel. And channel is something like that. So either that, or what you're looking for is a rejection to set up a lower low. And remember, you've got this 50.84, and then obviously after that you've got 5,000, which would be the ultimate level to the downside. Nice big round number, and you'll probably find a lot of structure below that. So there's 50.84, then 50.50 is the next level. That's the next major level of support. But if you start just looking a little bit lower, you'll find 5,000 down here. There it is right there. As you can see, fairly strong level on the 3 hour as well, 5,000. And then we've got a gap here as well. So the gap is at the close, 5,007 is a gap. Anyway, don't think you've got to move to the upside brewing just yet. I think it's still going to be more. If the first lot of banks were negative, the results weren't so good, I think your next set of banks are going to be the same. So the financial market will more than likely drive us down another leg. Okay, anyway, that's kind of my view. What you do need to pay attention to is if the US goes to war with Iran. That's going to drive the price of oil up. There's a whole lot of chaos that's going to happen. So that could also add to the volatility here as well. All right, so short it is. Just wait for the rejection of the zones higher up. And they are 51.66, 51.73, and 51.80, which would be ideal. But then do pay attention to this 51.50. It may also be a fairly solid area. As you can see, a lot of support there through 2 weeks. And we did close below it, so that could be a rejection area as well for a leg down. But I think you're going to get a bit of a stronger pullback based on the price action of the last 2 weeks. Hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.